deep diver and let's dive deeper and get a better sense of what the market construct is expected to look like going ahead. We've got Mr. Rohit Srivastava of India Charts joining us on the show. Rohit, hi, good afternoon. Good to be speaking with you. 24,000 seems like such a crucial psychological mark to hold on to right now, and we've come very close to breaching it in today's trading session. How do you reckon the second half is going to look like, and how are we set up for the rest of the week?
So you're right. We're at important, crucial levels, and thanks for having me. If we just look at the low point that we made at around 24th of July, we were at 23,600, and then into August we touched a high of 24,800. 61% retracement of that is close to around 24,045, and we've only marginally pierced that and rebounded so far. We're going to be watching that level because it's crucial. If this is a pullback inside what we think is a continuing upward trend, then this level could possibly hold and we could see the upward trend resume from here. So it's going to be a critical watching point from where we can get the resumption of the upward trend, because I don't think that this is a free fall crash or the end of the bullish trend, simply because we do not see that kind of weakness. Forget in the mid and small caps, not even the Nifty next 50 is that weak, or any other space in the market. So it looks like a very, very concentrated decline in large cap names, and that also Nifty related stocks, but not something that is broad based beyond that. And therefore, it looks very, very illusory to me.
Got that, Rohit. Hi, Meryl here, also joining in on this conversation. What's your take on the IT pack? I see that's one of the IT pack seems like one of the sectors that's holding on in today's trade. But even that's down like upwards of 3% from where we began the week at. What are the key levels you're looking at for the Nifty IT?
So you're right, Meryl. I think the IT index, which has shown recent weakness, I think the bounce, or what I would call as a counter trend bounce in the IT sector, is possibly over. And the Nifty IT index, I think the top that it made recently close to around 32,000, close to 32,000, let's say. I don't think we are going past 32,000. The chances are greater that the Nifty IT index goes back to test the lows that we made in July, which means all the way back to 25,800 or so at some point of time. Whether it happens quickly or slowly, that I'm not really betting on, but I think IT sector will continue to underperform equities, and that is what I expect to see. So not really betting on it, even though I expect a market rebound. Maybe they hold up a little bit, but I would not expect significant returns from the IT stocks.
That's your call on IT. On the flip side, Rohit, the sector that's under the most pressure today, the Nifty Defense Index, yesterday was the top gainer. Today we are seeing some pressure building in over here. And this is a trend that we're seeing anytime there's an index buzzing, maybe in one or two sessions at most, we're seeing sharp profit taking coming in. How are you looking at the Nifty India Defense Index, and any stocks that you like or a sectoral call if you can give us?
So, it's a tricky space. We do, when I look at the Nifty Defense Index, it does give me a sense that, okay, maybe there is some more upside, but it's also an expensive sector. It's highly valued. You want to buy it at the bottom end of the range and not the top end. And one resistance that we'll possibly face is close to around 10,400. So maybe if it pulls back at some point of time, if I get a pullback back to maybe 8,000, 8,600 on the Nifty Defense Index, I would probably want to look at it again. Right now, I'd be slightly cautious on this particular area. It's done pretty well. It has managed to make a new high this week, but I want to wait for a pullback before we consider it again.
Understood, Rohit. On valuations front, that's definitely one of the more expensive sectors out there. Can you tell us where do you see the opportunity when it comes to valuations? And since you mentioned that the large caps seem to be taking some bit of a hit, would your picks then be towards the broader end of the markets?
So definitely that's where the performance has been. Most of the ideas that we've really put out to clients have been in outside of the index. And over the last couple of days, most of the stocks outside the index have still continued to move higher. So that's actually been good. The index has been the pain point essentially when it comes to trading or putting out shorter term trading calls in large caps where you end up taking a hit. And segments, which we think have value are related to the commodity sector, because I think the commodity cycle is not over. In fact, it continues to pick up. It may even accelerate in the months ahead once we are done with the bond market and dollar cycle. In fact, the dollar this time is diverging from the bond market, which is a signal that we may see a turn in the bond market as well, and that could be a good trigger for the commodity stocks which have held up well. Mostly you've seen copper prices hold up better than others, but I'm also expecting agro commodities like sugar to do pretty well, which have rallied in the last month or so. Basically, we are looking at investments in the commodity, agro commodity related sector to do much better, and where the value really exists.
Okay, that's your take coming in. Rohit, thank you so much for taking the time out and speaking with us and sharing your insights with us and our viewers. Thanks for your time today.
Pleasure. Thank you.
Thank you.